All right, let's talk about Webull. It's the trading app that has absolutely exploded onto the scene. But with all that crazy growth, you've got to ask the big question. Is Webull a charging bull, ready to completely take over the market? Or is it a bear, hiding some pretty serious risks? Let's dig in and find out.
So we're going to get right to it. Is Webull actually the future of trading, giving regular people like you and me incredibly powerful tools? Or is all this super fast growth just masking a much riskier bet for the company and its users? The wild part is, the answer is kind of hiding in plain sight, right inside their own financial documents.
Okay, so first things first, you have to understand what makes Webull so different. They've really come in as this major disruptor in the brokerage world, trying to carve out a brand new space for a whole new generation of traders. And look, this quote right here, straight from their own SEC filing, basically says it all. Their goal isn't just about offering cheap trades. No, it's about giving the average person the exact same powerful tools that used to be locked away for Wall Street pros only. So this is how they're making their move. They aren't trying to be like those old school desktop-only brokers. And they're not trying to be one of those super simple apps for total beginners either. Webull is aiming right for that sweet spot in the middle, a platform built for your phone that's packed with pro-level data, all for a really competitive price. And you know what? It really looks like that strategy is paying off, big time. So let's start with the bull case, the story of a company that is just on an absolute tear, growing at a speed that's, well, it's kind of mind-blowing. Get this, in just 2.5 years after launching in the US, Webull got over 1 million funded accounts. I mean, in a market this crowded, that is just insanely fast growth. It really proves that their whole approach is resonating with a new wave of investors. But they weren't content with just the US. This timeline shows they are just aggressively expanding everywhere, from Asia to Europe to Africa, and now they're looking at Latin America. This isn't just growth. We're talking about a full-on global land grab. And all that global expansion? Well, it's turning into some serious money. Just look at the first half of 2025. Trading revenue jumped to over $148 million. That is a massive leap from the year before. And that's the kind of explosive growth that makes investors sit up and pay attention. But here's where it gets really interesting. A whopping 74% of that revenue, it comes from options trading. Now, if you don't know, options are these complex financial instruments that can be way riskier than just buying and selling stocks. So this tells us something huge. Webull's users and its profits are tied up in a much higher stakes game. And right there, that's where the whole story takes a sharp turn. Yeah, the growth numbers look incredible on the surface, but if you start digging into the fine print of their own legal filings, a completely different picture starts to form, one that's full of risks and some pretty big red flags. All right, so let's flip the coin and look at the bear case. And the thing is, we don't have to guess or speculate here. We just have to read the risk factors that Webull itself is required to tell its potential investors. So yeah, revenue is climbing, but look at this. The cost of that growth? It's climbing even faster. Their operating expenses are just surging, jumping from almost 200 million to 232 million in a single year. Spending more money than you're bringing in, that's a really tough path to building a business that lasts. And those rising costs, that's just the tip of the iceberg. Their own documents lay out this whole minefield of challenges. They're back to losing money, they're facing brutal competition, they have to deal with this crazy web of global regulations, and they're caught up in geopolitical risks from US-China tensions, especially since a key R&D center is in China. Now, we need to talk about power. Webull is what's called a controlled company. Basically, that means its founder holds over half of the voting power. Now, why does this matter? Well, it lets them get around certain NASDAQ rules, like having an independent board of directors. For an average shareholder, that means less oversight and pretty much zero say in how the company is run. And if that wasn't enough, there's another layer here. Webull is also a foreign private issuer. In simple terms, this means they don't have to follow the same strict, timely financial reporting rules as US companies. So for an investor, that could mean you get less information, and you get it later than you would for a domestic company. Okay, so you've got the bull case, you've got the bear case. How does this all stack up in the real world against their rivals? And maybe more importantly, what are actual investors saying about this whole bull versus bear debate? To really get Webull, you have to put it side by side with its biggest competitor, Robinhood. Think of it this way. Robinhood is all about making things simple, easy, and accessible for beginners. Webull is for the trader who wants more data, more charts, more advanced tools. For their users, the complexity isn't a bug. It's the main feature.
And you hear this all the time from the bulls, the people who love the platform. It's all about empowerment. They feel like they're finally getting their hands on the same kind of stuff that pros use, and they see that as an absolute game changer for the entire industry.
But then you've got the other side of the argument, the skeptics. And their concerns echo the exact risks we just saw in those SEC filings. They see a company that's burning through cash, fighting in a brutal market, all with a corporate structure that puts all the power at the top and leaves small investors out in the cold.
So we've seen the explosive growth, and we've seen the very serious risks. After all that, what are you supposed to do with this information? What's the final takeaway here? Let's just break it down into 3 simple steps. First, the bull case. You have to acknowledge the growth is real. The users, the revenue, the global expansion, it's undeniable. Second, the bear case. You have to weigh those very real risks, from losing money to that corporate structure that gives you no power. And third, it's a personal call. You have to decide if getting those advanced tools is worth all the complexity and risk that comes along with it.
Which brings us to the biggest question of all, really. Webull is like a perfect snapshot of the modern investing world. It offers you incredible power and opportunity, but it comes bundled with a whole new set of risks. So the ultimate question isn't just about Webull, it's about you. In this crazy new world of trading, how much risk is too much?